All right, good morning, folks. It's shortly after, excuse me, 7:30. And we're just going to go over our trade real quick. Yesterday, we did open a position in CCL, which is gapping just a little bit here. So let's see what we did. When we go to our monitor tab, we'll go CCL. We'll go back 2 days. Here we opened just 100 shares, so right, $2,200 in this particular position at 22.67, and then we sold the call just out of the money, right? So 22.67 and sold the 23. So you can see this here in CCL 22. So we're up about 20 bucks in this position here, and we're even. So we sold that at 40. So the ask is at 40. And so in the Analyze tab, it's going to look like this, okay? So we bought the stock at 22.60, I think it was 63 or something like that. So right here on this line, and we sold the call at 40. And so our total amount of profit that we can make on a $2,200 investment is $72, right? And it could go to infinity, right? And we're going to make that $72. But our downside is capped by an extra 40 bucks, right? So the most we can lose 22.67. So the most that we can lose 22.27, right? And every week we'll just currently sell or sell that call there in order to generate premium against these shares. Now, when we look at CCL, we have pretty good premium. It's a 77.67 volatility, implied volatility, right? And we see additional weeks out here, 62, 62, 62, 67. But what I kind of like to look at, and one of the things that's important is if we're selling for 22 right now, 22.78, 22, let's say 22.90, and we can get for a just out of the money call at 23, 70 bucks over 9 days, right? That then becomes 3.5% against CCL. And so one of the things that I really like about this strategy is when you are finding these securities that either have a little bit higher implied volatility or alternatively, or a little bit higher priced and paying a decent premium, you can generate 10% a month, 8% a month on those shares, right? And so over the course of a month, if I were to sell 22, if the stock were to say around 23, and we know it's not, but if it were, right, you could generate 200 bucks just on this $2,200. And so the risk reward there is pretty good. Now, when we go to the chart for CCL, and these are our minis, we'll get out of this. Let's just find one. We'll take Piton out. Ooh, I'm lagging a little this morning. All right, so if we change Piton to CCL, you can see that we do have decent movement, and that's why the implied volatility is high, right? That's why the implied volatility is high. But we see that even throughout all of the issues that we've had, and this I think was getting a December 12/1, even through all the Omicron variant scares, we only saw us go down to 1838. And so I would only need to generate $400, which I can do over 2 months, in order for that break even to be down here at $1,800. Everything after that, even if it were to crash to 18 right now, everything else after that is gravy, right? And so that's why the strategy is so powerful on these stocks. I mean, and we know Carnival, right? We know Carnival Corp. We know that it's a security that it's probably going to be around for a while. It's a huge cruise line, right? It's a huge cruise line. And so when we look at securities and we're trying to find securities to run these covered calls on, you don't need a lot of capital, right? So again, $2,200, and over the course of the year, if I average 2%, 52 weeks, that's 100%. So in theory, right, you can take 2,200 and turn it into 2,200 just by selling, in this case, 40 bucks a week, right? And so that's the general idea. And I'm always going to have a number of these on, a number of these types of securities on. So, but that is exactly why I did it in CCL. And that's a little bit of the information kind of behind the scenes as to what's going on. All right. If you have any questions about this trade or the strategy in general, please reach out to me via Discord. Otherwise, I will see you on the other side.